Now, over the past decade, China's financial role in Africa has transformed dramatically. Where once it was a leading source of development loans, new research shows the continent now repays more to Beijing than it borrows, marking a $52 billion reversal in net financing flows. Between 2010 and 2014, Africa received about $30.4 billion in net funding from China. But over the last 5 years, that position slipped to $22.1 billion in net repayments to China. This shift has profound implications for African economies, public finance, and the future of development partnerships on the continent. And to give us more perspective, we have the Executive Director of Firstsource Money, Redge Nkosi, joining us from South Africa. Good morning, Reggie. Great to have you in.
Good morning. Thanks for having me.
Yes, a pleasure. And we're looking at the data now. It shows that between 2010 and 2014, Africa received roughly $30.4 billion in net funding from China. But in the past 5 years, it has paid over or around $22.1 billion, effectively flipping that financial relationship. What are the main forces behind this major swing? And are you surprised in any way by it?
Absolutely not. I think China is changing dramatically. I think what has informed China's position right now is the fact that we've had a bit of challenges with the large infrastructure projects that China has been financing. Africa hasn't been paying properly as it should, and therefore China is reversing that to focusing on more strategic projects that are commercially viable than the massive railway, road, and so on infrastructure project. Remember, not long ago, Ghana defaulted. Ethiopia, too, went into trouble, as much as Zambia as well did the same. And quite a few other African countries are experiencing challenges. So China is beginning to shift its focus away from the massive projects that it's been financing to smaller ones. But I think later on, as the relations mature, this shift may go back to its original position, because I think Africa will continue to rely on China in such a way that for now, this relationship may be souring, that much of the money is being paid to China. I think later on, China will reverse this approach.
I mean, it's interesting your expectations that China will reverse this position, because we are seeing African nations, or is it just lip service, talk about less dependency to hold on to their sovereignty. Do you see that as just lip service?
Well, local financing is very, very important. In fact, us as economists are encouraging many African countries, almost all African countries, to do domestic financing. However, the overhang or there's so much overhaul in South African economies by the system that we inherited from colonial masters, that we continue to follow their approach to financing. Hence, we may not move away from it in such a drastic way as to avoid external financing. So I think we'll continue to get money from abroad, even if there is now an emphasis that we should be financing our projects from our own domestic resources. But I'm afraid this may not materialize in the shortest possible time.
Right. And speaking of the short term, we have mentioned the shift with China as regards that becoming, net debt collector. How do you see this affecting African governments' fiscal capacity, especially for infrastructure, health, and education?
I think there's going to be a lot of problems with that. The Africans' fiscal capacity is very, very much constrained. We don't think they're going to afford it. But anyhow, China is capable of negotiating quite well with Africans, and that may as well ease the fiscal constraints that we have. But, at the end of the day, Africa has to learn as well, in such a way that when it borrows at the times that it can afford, instead of just borrowing for the sake of borrowing, because China, as a lender, needs its money to be paid back, and has to be paid back in a manner that it enjoys that payback. That hasn't been the case from Africa, but nonetheless, I think the fiscal position for Africa may not deteriorate any further. It will continue to be in the spot it has been for the recent past.
And I mean, what does this drying up of new Chinese lending mean for Africa's broader development finance ecosystem, and which sources are, stepping in to fill the financing gap? Remembering what's happening with Afreximbank, of late.
Yes, I remember now. We had a problem with, the Fitch rating agency had a problem with Fitch, with Afreximbank, and the challenges in that front. But I think Afreximbank is going to continue to assist Africa. The African Development Bank is going to continue to do so. There are quite a few other development banks in the continent that can, quite frankly, afford to come into the picture and support the African development. But again, in my view, is that China, as well as some other friendly countries, will continue to support Africa, but at a reduced rate than perhaps the rates that we experience right now.
And finally, do you see the rising burden of Chinese debt repayment? Do you see that heightening fiscal risk for specific African countries more than others? For instance, those who are still owing the largest portion in bilateral loans?
No doubt, no doubt. Remember, China is not the only player in the market. We also are indebted to World Bank, the IMF, the Paris Club, and so on. So yes, there's going to be a constraint in our fiscal position, but given time, this should ease. Remember, we also depended on our commodities for exports, and we're seeing that there is a great deal of high expectation from revenues coming from this side of the equation. So our fiscal position may not necessarily worsen, given the fact that we are enjoying a commodity boom as to way for now.
For now, I think that's the key word there. Thank you very much, Redge Nkosi, Executive Director, Firstsource Money, for your time and perspective on the conversation this morning.